had Amit Kumar Sinha as the MD and CEO of Mahindra Life Sciences. All of this happening in just the last 10 odd days. So these were all the big changes. We also welcome Hiren Ved of Alchemy on our show. Hiren, thank you so much for joining in. These many changes, of course, all these companies are well-oiled machines. Just wanted to know if there is one change that stood out for you and you are betting on the company or looking at differently after a management change?
Well, I think, in the case of TCS and HUL, I think it should be business as usual, right? I mean, these companies have a very, very strong bench of managerial talent. These are large companies, well-oiled machines, and therefore there should be no disruption and there should be a reasonable amount of continuation, right? I think usually what is exciting is that if a company, for whatever reason, has not been doing so great within the sector, and you do get a new leadership, I think that there is, there is a point to be considered that things could significantly change in terms of strategy, in terms of performance, and so on and so forth. So if you put that perspective, then I think the two most notable ones that I would suggest is one is iProve, where Anup Bagchi has taken over as the CEO. He has had a superb track record in ICICI Bank, and I do believe that that he will certainly be able to make significant changes in the trajectory of growth for iProve. Obviously, the entire insurance industry is entering some kind of a regulatory headwind with the cap on the tax benefits for large policies. But given his retail experience, I think that there is a reasonable probability that he should be able to bring iProve into top gear. And the second name would be Tech Mahindra, where I think that they have great capabilities, but both from a margin and growth perspective, I think that there is a clear possibility that things could change for the better. And I think the markets recognize that pretty quickly when these two changes were made. The stocks rallied. And usually our experience has been that, there is usually a honeymoon for a year because investors give them a benefit of doubt. There is a hope, there is a certain option value that is built. And then they obviously would want to see the change in performance. So typically they do give a thumbs up. They give them a couple of quarters, and then it really boils down to what changes these new CEOs and leaders make in the respective organization. So from my perspective, I think these two are the most critical.
Got that. Got that. The other important thing is, Hiren, the bank Nifty, that's been a big underperformer. While as Reema also pointed out, it's a Goldilocks scenario for most of the banks. But bank Nifty is down 10%, individual stocks are down 15-20%, and we had a change in IndusInd Bank as well. So view on IndusInd Bank after the change, and overall on the banking sector, what's the pecking out of there?
So I think with IndusInd Bank, in a way, it's good that there has been a 2-year extension. Well, I think initially people they had applied for a 3-year extension, but they got 2 years. But 2 years shouldn't be bad, right? I mean, 2 years is also a reasonable time frame. I think the sell-off in the banks is largely to do with the risk off we've seen in the last couple of weeks, because, and especially after the SVB bank failure in the US, while I think that there is no direct correlation, I think Indian banks are pretty strong, great deposit franchises, very well capitalized, and so on and so forth. But I think it was more of a risk off, which is being reflected in the bank Nifty. Having said that, I think, also in the sense that these are this is a sector which is fairly liquid. So if people want to hedge or short, this becomes a great instrument to do that. Sometimes you just have this global correlation, right? Banks go down everywhere. Banks in India also go down. But I think that to me looks like a very temporary phase. The only thing that I would say is that typically the banks were benefiting from a rising rate scenario, right? So they typically benefit because the assets get repriced first and the deposits take time to reprice. And we've seen a superb Goldilocks scenario as far as the NIMs are concerned.
Okay.
And I think if this is something where the market is sensing that maybe one more just last rate hike from the RBI and then a pause, I think you will see that NIMs more or less would have peaked for the banking sector in India.
Hiren, wanted to get your thoughts in on the tech sector. At the beginning of the year, your call was that the Indian IT sector is likely to bottom out in the first half of the year. Given the concerns surrounding the US global banks, the possibility of them being capital constrained and therefore going slow on their tech budgets, maybe cutting back, is there a risk to the earnings of IT companies more than what you had anticipated, say, in the month of January, given what we've seen right now?
So, Reema, I mean, you cannot wish away the fact that there would be some uncertainty around tech spending, especially with the smaller banks, right? The smaller regional banks and so on and so forth. But we need to recognize that maybe the discretionary part of the spending cut. We do not know as of yet. I don't think even the companies know that. But you know that when something like this happens, the markets typically tend to price in the worst. And then as and when things unfold, either things snap back or, you kind of then the market starts to price in the actual reality, right? But initially, the market typically tends to have a knee-jerk reaction and it prices in the worst. And I think that's what happened in the tech sector, right? But you could also argue that most likely there will be more stricter regulation when it comes to the smaller banks and the regional banks. And when that happens, that could actually mean higher tech spending by these banks, because we have seen in the past, for example, after the global financial crisis, when there was more regulatory and risk management, actually there was a rebound in tech spending at that point in time. So maybe there could be a hiatus for a quarter or two, but it may turn out to be a boon in disguise for the tech sector, in my view.
That's an interesting way to look at things. I think you're referring to Dodd-Frank, right? And I think that benefited financials quite a bit. Hiren, it's a pleasure. Thank you very much for joining us on this program, and look forward to speaking with you soon again. Well, guys, that's it. Finally, for the week. So just to recap plans, cricket, sleep, and party, right?
Coffee.
All right, coffee. You sure it's just coffee, right?
All right, I think we'll say goodbye. Thank you very much. Have a restful weekend, and we will see you back on Monday morning with all the latest action.